Yes, you can start.
Okay. So, good afternoon everyone. My name is Shailendra Singh. So, I am here to present my final Viva presentation. Respected jury member, my supervisor and other panel members here. So, the topic for my presentation is critical factors affecting market efficiency in Indian mid-cap and small-cap indices. So, as ma'am said, I just quickly go to the required areas. So as we all know, like market efficiency is a highly debated area. There are two different school of thoughts here. There are proponents of the market efficiency and there are opponents of the market efficiency. But if you see like across the globe, worldwide, an efficient market is something what every regulator has a key goal. Why we need efficient market? Because you can see here, the efficient market can help us in capital formation, can help us in channelizing saving into productive investments, and also provide a transparent trade and transaction buildings. So all those things are there in efficient market. So it's as I said, it's a heavily debated concept. And now I can say the efficient market is a dynamic phenomenon. So efficient market, whether the market is efficient or inefficient, so it is better to say that whether the market is relative efficient or relative inefficient. So we are working on that aspect, like how the relativity is connected with the market efficiency. So I am just quickly, these are the certain important definitions that Eugene Fama has given: a market in which the price always reflects available information. That is what the market efficiency of the market. So I am not getting in detail about all these aspects. So I am quickly moving. So I wanted to touch base this point, the relative efficiency. So why the relative efficiency is important in the market? Because you can see there are anomalies, there are crashes, there are bubbles in the market. So to understand these crashes, these bubbles, it is important to understand how the market is efficient and how the market is taking all these shocks in the market. So inefficiency, basically because in India itself you can say there is abnormal profit that is there in the market. So these abnormal profit is because there may be a chance that there is an inefficiency in certain aspect or certain sectors of the market, and that's why this inefficiency will be taken care. So what is my area of research I wanted to highlight here is there are drivers. What are the key drivers for these inefficiencies? We need to understand what are the factors that is driving this market as an inefficient market, and if there is certain factor, do we look into is there any latent factor that is also coupled or that is also coupled with this major factor. So that is what I am trying to look into this aspect here. So that's why I said there could be these are generic factors like cognitive errors, in investor sentiments, price distortion and manipulation, inadequacy of regulations or macroeconomic factor. These could be the factors here. So as we all know about this thing, so I am not moving here. And then okay, now I need to tell about the background of my present study. Why I have chosen this topic, what is the importance, why we are looking into this. As you can see that there is an unprecedented growth that is being performed post-COVID in mid-cap and small-cap indices. There are many factors out of it. First, you can see the retail participation has significantly increased post-COVID, mainly in the mid-cap and small-cap indices. Surge in the price of a mid-cap and small-cap. Mid-cap and small-cap on a yearly basis, 30 to 40% return that they are providing to the investor. Increase the fin influencers. The fin influencers has significantly increased post-COVID area. And as we all know, like India is $4 trillion plus dollar economy. So these are the triggering factor. You can see MSI index weightage. In 2008, we are just 8.25% of MSI weightage. Now we are around 20% of the MSI weightage, which is a significant amount that is going in the global aspect. These are the certain, when I do my literature review, we identified like there are researches that is being performed in the past which keeps telling that Indian market lies somewhere between semi-strong and weak form of efficiency that is there in the market. That what there you can see these are the certain researchers that I refer, and I was looking into these things. But what is the research gap? What I am trying to look, what different I am going to do here, that is what I am going to highlight in this case. So you can see that. So yeah, so first of all, you can see there are major aspects like Indian market has been focused on why the Indian market efficiency is low. So everybody is talking about what are the factors that is contributing, but no one is talking about why these factors is being there. What are these factors? Why factor is largely absent when we looking into all these kind of researches? The researchers always talk about Indian market is a semi-strong form of efficiency, Indian market is a weak form of energy, but no one is going to talk about the why factor. That I am going to look in this type. What are the latent factor that is contributing the market efficiency and that is lagging the market efficiency of the industry? Second thing is that we also know that like there are very few studies that talks about the market participants' point of view. Normally the studies which talks about the secondary data, how the price impacted, how the price moved, and based on that aspect they tell okay market is a weak, strong and semi-strong form of efficiency. But what about the brokers, what are the traders, what are the market participants, what is their opinion, how they feel that the market efficiency is lagging? So I am also taking care of that, I think. And also what I'm trying to look once we identify these factors, what are the missing links? How can we interlink all these factors with the efficiency, whether these factors are relevant with the efficiency or working with the efficiency or not? That is what also I am looking into it. So these are the research gap that I have identified, and that's why I am working on these aspects. So yeah, you can see there the relevance of the study. So we identify the macroeconomic factor, macro level factors is like Indian capital market in the mid cap and a small cap. So the study explores the latent factors. We are also looking for a latent factor. What latent factor is hampering the market efficiency? Investor bias, market misconduct, insider trading, market regulations. These are the latent factors where we almost most of the studies, these correlations, these things are missing. It is absent. I can't say there is a limited research. I can say that there is no research that is being performed to understand whether the market regulation or investor behavior is hampering the market efficiency or not. That is what I can say here. The result of the survey gives an important insight on the perception of the market participants, market makers, like who is the traders, what is their perception about the efficiency of the market. That is also from the regulatory standpoint of view. As we know, like we identify there are a lot of factors that is hampering the efficiency, how regulators can take some input out of it and how they can enhance their surveillance mechanism. Although regulator is doing a lot of things, but yeah, maybe these are certain factors where regulators need to work a bit more to make things more dynamic. That is another angle. So these things that I'm basically looking, maybe the policy attention and all those aspects is also important here. So that's why the relevance of this study is very important from the market, from the regulator and from the investor perspective. The present study focus on the Indian mid-cap and small-cap indices. It's look for the observed efficiency. The adopted approach is a combination of descriptive and explanatory methods, and this is going to be a contribution. And we are also providing a regulatory approach to the framework to the regulator to enhance the market efficiency. That is also we are doing here. Now I'm coming to my research objective. You can see the first objective is to determine the set of generic factor as well as latent factor hindering the market efficiency of the Indian capital market. That is my first objective. The second is to analyze the perception of the market participants with respect to critical factors of market efficiency. And the third is to examine the level of efficiency of the Indian capital market with respect to mid-cap and a small cap segment. And fourth, we are proposing the architecture framework to the regulator to propose an approach to the regulator for improving and enhancing the overall market efficiency, especially focusing on the mid-cap and a small cap segment. So that is my objective for the research. Research design. As I informed you earlier, like the research design is a descriptive design, and we are looking into the latent factor. We are going to explore, and then we have exploratory design. We are exploring and we are trying to understand the correlation of these factors. We are also looking for a primary data and a secondary data. Primary data we are looking for the traders. Our participants are all the trader who is trading in the stock market. That is our participants area. And secondary data we have taken for the mid cap and small cap indices. I am getting in more detail on these areas also. See the data collection, yes. So the primary data, yes, we have a structured questionnaire. It's a Likert scale questionnaire. Population is SEBI registered broker. Sampling method is purposive sampling. Sample size 366 registered SEBI brokers, and data analysis is descriptive statistics, bivariate correlation, chi-square test, factor analysis, multiple regression, and Mann-Whitney U test. That is what we have done. For why I have taken the purposive random sampling, because we know like in the broking industry, all the brokers, mainly most of the brokers are concentrated at the Bombay location. So we need to concentrate mainly on these locations, although there are certain big brokers which resides in Chennai and Delhi, so that's why we have looked into. But yeah, major part like 70 to 85% brokers are concentrated on Bombay, so that's why we have taken this approach. For the secondary data, I have taken the 6 indices, that is Nifty Midcap 50, Nifty Small Cap 250, Nifty Midcap 150, Nifty Small Cap 100, Nifty Mid Small Cap, and Nifty 500. These are the 6 indices that I have taken for my analysis. Data points. Historical market data is like a daily opening, closing, high and low values that I have taken, and the period is 1st Jan 2008 to 31st December 2023, and the data analysis tool that I have used is descriptive statistics, ADF test, runs test, autocorrelation. Now for my objective 1. So my objective 1 is, as I said, like to determine the set of generic factor as well as latent factor hindering the efficiency of the Indian capital market. So the research design is exploratory design. Data source, as I said, is a primary data based on the structured questionnaire. Data analysis is exploratory factor analysis using principal component analysis method that I have done. So here the exploratory factor analysis that we did, we have defined. So how I define, you can see here, the factor analysis is a method of identifying the cluster or group of variable related to the specific entities. So once we define the questionnaire, there are 53 questions that we have identified based on the Likert Gard, and then out of which we did a scale validation. From the scale validation and based on the literature review and based on the 5 subject matter experts, we have filtered it down from 53 to 48 questions, and from 48 questions we did a content validity analysis, and from based on the Edward formula, and we identified there are 44 questions that is there, and these 44 questions are get into the factor analysis for the further analysis. So we have a 44 questions that is there for factors that we are looking into for the factor analysis. The result of the factor analysis using the PCA method, 4 questions, we've identified that there are 37 items indicated substantial correlation, where the correlation commonalities is more than 0.4. So which we can say that yeah, this is good, and you can see the Cronbach alpha reported as 0.802, indicating internal consistency and reliability of these 37 items. So once we did that, we identified more than half of the variance attributed with the share factor of the cumulative variance share factor is 68.734, which is I think significantly good, and based on this we identified, based on the eigenvalue, we identified the 5 components that is being extracted here. The 5 components that we have which we have extracted here are firm accountability and responsibility, market misconduct, investor behavior, market regulation, and his historic price. So these are the 5 components, these are the 5 factors that we have identified based on our factor analysis. So you can see, so when I'm talking about the 5 factors, these are not just a factor, they have the constructs also. So you can see like investor behavior has 11 constituents, which has a weightage of 22.52%. Market misconduct has 10 constituents, which has a weightage of 17.76%. Historical price has 6 constituents, which has a weightage of 14.34%. Same with the market regulation and firm accountability and responsibility have a 5 constituents, and I also have a close to 7 to 6% of weightage. So if you can see here, when I'm talking about the investor behavior, we are not just talking about the investor behavior, but there are close to 11 constituents. I can just give you a quick view, like herd mentality is one of the important factors. Investor attitude towards booking profit and loss. The general investor sentiments. Pardon, ma'am? Yeah, that's fine. So what I'm trying to tell you, like, yeah, these are not just a factor, but in the factor itself, we have looking into a smaller aspect of these factors to make sure how these factors is being worked. Sorry. Then the major finding of my objective 1 is market misconduct and investor behavior demand a significant policy attention, because they can cause substantial deviation in capital market. So I'm giving you one example, like investor behavior. As we're talking about investor behavior, we know like there are a lot of herd mentality is there in a market. For example, most of the people are trading based on the tips, based on like, okay, so you have purchased this, I also going to purchase this. This is a very good stock, all those things. So these are the behaviors. But to be honest with you, regulator is trying to do a lot of things. But still, you can see, I'm giving a simple data. On a monthly basis, there are 50,000 crores of mutual fund is being purchased, out of which 26,000 crore of SIP is being there. And regulator is doing 200 investor awareness seminars. These are not correlated, right? We need to scale it up the way it is moving forward. So that is there. Exploratory factor analysis indicates market regulation can significantly influence the market efficiency, which is crucial for the capital flow of the investment. In addition, historic market data and other characteristics such as market depth, volume, volatility is also impacting the sentiment of the market. And firm level disclosure, basically this is a corporate governance, but still these are also an important factor that is impacting the market efficiency, because a major firm is doing any corporate default or anything which is not as per the regulatory guideline, that is definitely impacting the efficiency of the market. Now I'm moving to the objective 2, which is to analyze the perception of market participant with respect to the critical factors of market efficiency. This is a descriptive analysis. The data source is a primary data source based on the structured questionnaire. Here also we have a bivariate correlation, chi-square test of association, Mann-Whitney test, and multiple regression. Here I have a 12 hypothesis that I am going to test. So if you can see the hypothesis from hypothesis 1 to hypothesis 5, that is purely talking about the mid-cap segment, where we are saying that there is no significant association between investor behavior and the market efficiency. Similarly, no significant association between the market misconduct and efficiency, historical price and efficiency, market regulation efficiency, firm accountability and efficiency. This is what I am trying to say here. This is my null hypothesis, which says that there is no significant association here. Similarly, from hypothesis number 6 to hypothesis 10, we are the same hypothesis is there, but that is specific to the small cap segments. So this is specific to, again, the same investor behavior, misconduct, historical price, market regulation, and firm accountability. So if you see the result of my first hypothesis H1 and H2 is like, yes, the p-value of both the hypotheses is less than 0.5, which means that we are rejecting our null hypothesis, and we can always say that there is an association, there is a significant relationship between market investor behavior and market efficiency. There is a significant relation between market misconduct and market efficiency. You can say that, except one factor is greed and fear. That is what, because in greed and fear, the value, the p-value is greater than 0.5. So that's why that is not accepted there. And then we have again for hypothesis 3 and 4, you can say that yes, again the p-value is less than 0.5. So again accept market open and close and historical price. And for H4 is accept penalty and sanction and social media. So again we can say that, okay, I am rejecting my hypothesis number 3 and 4. So we can say that we are accepting my alternate hypothesis, which is there is a significant association between historical price and market efficiency, and again for market regulation, market efficiency. This is my fifth hypothesis for the mid-cap segment, which states that yes, firm accountability, again I can say that except board meeting and attendance, all the factors is being rejected because the p-value is less than 0.5. So in this case, again I can say that the firm accountability and market efficiency, there is a significant relationship between that. Now same I have applied for from 6 to 12 for a small cap. Shall I move a little further? That's fine. This is for example, again all the hypotheses are rejected here, and I can say that if my original hypothesis is null hypothesis is rejecting, it means my alternate hypothesis is accepting here. For a small cap, this is same for the mid cap, but there are certain factors which is deviating in mid cap and small cap, but more or less all the hypotheses of mid cap and small cap are getting rejected and alternate hypothesis accepted. It means there is a significant association between my factors and the market efficiency. Now I'm talking about my 11th hypothesis, which says that there is no significant difference between market efficiency of mid cap and a small cap segment. So for this I have defined a Mann-Whitney U test, and you can see that the z value is 1.04 and the p value is 0.242, which is significantly higher than 0.05. So I can say that this hypothesis is not rejected. So I can say that yes, in this situation there is not enough statistical evidence to imply that market efficiency of the mid cap and small cap are different. So definitely, yeah, this is accepted. Yes, that is correct. There is no significant difference between the market efficiency of mid cap and small cap, which concludes that. Now, I am going to talk about my 12th hypothesis, which talks about there is no significant relation between the overall market efficiency with critical factors. So in this case, I have applied multiple regression. The dependent variable for multiple regression is overall market efficiency, and the independent variable is critical factors, the 5 predicted variables that I have identified based on my objective one. So you can see the predicted variable: investor behavior, market misconduct, historical price, market regulation, firm accountability and responsibility. So as I said, like for first one there are 11 parameters, 10 parameters, 6, 5 and 5 parameters are there. So you can see that the R square value is 0.73850, which is greater than the acceptable value of 0.70. So this clearly explains that the predictor variable has well fitted in the model. And if you look here again, all the p-values of this hypothesis is less than 0.05, and the beta coefficient is so now you can see here there is one thing which I wanted to highlight here is out of 5 I find the 3 has a strong correlation with the market efficiency. The 3 that I'm talking about is the investor behavior, market misconduct and firm accountability and responsibility has a strong correlation with the market efficiency. So you can see the beta coefficient of investor behavior is 0.4713, the market misconduct is negative minus 0.2054 and the firm accountability is 0.2560. So market misconduct and investor behavior and firm accountability has a positive correlation, but market misconduct has a negative correlation in this case, which we have identified here. So you can see that as I said that all the p-values is less than 0.5. So yes, your null hypothesis is rejected. So alternate hypothesis accepted. So which means that there is a significant relationship between the overall market efficiency with the critical factors. And as I said, like the coefficient, so you can see here the third point, the coefficient of investment behavior and firm accountability and responsibility are positive, which indicate there is a positive association. The coefficient of market misconduct is negative, which indicate the negative correlation. So overall market efficiency is, you can see 5.34 is the intercept, which we have identified here. 5.34 is the intercept, and if you see here the investor behavior minus market misconduct plus fund accountability, this will tell you the overall market efficiency of this thing. So technically speaking, yes, my hypothesis number 12 which says that is rejected, which we can say that there is a relationship between the overall market efficiency against the critical factors. Now my objective 3, to examine the level of efficiency of Indian capital market with respect to mid-cap and small cap segment. This is a descriptive. As I said, the data source is secondary data. Secondary data I have taken 6 indices and the period is from 1st Jan 2008 to 31st December 2023. For this, what we have done is ADF test, autocorrelation and run test that we have applied here. So you can see that the t-value and the critical value at 1% and a 5%. Which I can say that the t-value is much lower than the critical value of at 1% and a 5%. So what this means that this is contradicting the random walk theory. Stationarity in the data is not random. So if you can say that, okay, what do you mean by random is like what happens yesterday, what is happening today, what will happen tomorrow. It's not random. There is a correlation. So again, as in the past research also I read a paper that they also talked about the same thing, that it is a correlated. It is you can say it is not work on the EMH efficient market hypothesis. So you can see here, for the purpose of result of this autocorrelation, the purpose of autocorrelation test is time series divided into 18 lakhs. We have divided the data from 1st Jan 2008 to for 31st Jan 2023 into 18 lakhs. The autocorrelation of all the 6 reveals that the Q status is less than 0.05. This makes a strong case against the assumption that there is no autocorrelation in the stock prices. The further also contradict the random walk theory. That's what I'm talking about. This suggests that the presence of autocorrelation in the data set and the stock market returns does not follow the random walk. So this is not following the random walk. This is basically purely based on the stationarity of the data. The data has correlation in this case. The result of the runs test, you can say that in this case also my p-value is less than 0.05 for all the indices we have defined. We have run the multiple cases here, and the findings says that runs test shows that the NSE broad market does not follow the random walk pattern. The results suggest the presence of a weak form of, as we all know, like the India is, again it is in line with the past researches. Yes, this is a weak form of efficiency where the price does not predict the future price accurately, because there are a lot of factors like information asymmetry, there are the herd behavior, and all those factors are always there. In summary, the study empirically evidence collectively indicate the significant departures from the assumptions of EMH. So yes, definitely, yeah, that is also in line with the past research. The indices operate in a weak efficiency manner where the past price does not fully reflect all the available information, thus rejecting the hypothesis and enhancing overall market efficiency with a specific focus on a mid-cap and a small-cap segment. That is what, after careful analysis of literature and the result of the primary and secondary data, a suggestive framework assessment matrix for greater market efficiency was developed. So as you can say, like yes, as we know, like investor behavior and market misconduct, these are three factors which we identify which has a strong correlation based on my objectives with the market efficiency. But investor behavior parameter is beyond a direct and immediate control. So if you ask me, like the investor behavior is something which can change or build with the time. It's not that you are going to encounter daily. Investor behavior is like how you are going to aware your investor, how the investor is, there is not a herd behavior, herd mentality, there is not something that the tip going economy is there. So definitely investor behavior can't be encountered on a daily basis to the regulator. And the firm accountability is, as I'm talking about, firm accountability is always talk about the corporate governance. Corporate governance is also like SEBI has to define certain sets of regulations, rules for the firms that need to abide, and if they are not abiding, they are not complying the regulatory guidelines. That could, but yes, we can work something on the market misconduct. That is something which is a pain point at this point of time from the regulator perspective, which we need to take care. So that's why we have taken out of the three important factors, we have taken the market misconduct to build this assessment matrix. So I'm just giving the 10 use cases that I have. So see this is something, the matrix that I am proposing to the regulator. Here you can see that these are the certain use cases, and where we are talking about there are a couple of information: historical market data, public information, private information, bid-ask spread, market liquidity, and price fluctuation. So we all know like what is public. Bid-ask spread is talking about the market liquidity, whether the stock, if the stock is illiquid, the spread is high. If the stock is liquid, then the spread is low. Market liquidity, maybe then there is direct correlation, and the price fluctuation is like whether the price is significantly moving or not. So now what we are going to do, taking the use case 1, when you have all the things available, and when you have all the things present in the data of particular stocks, then regulator need to take an hawkish stance. Hawkish stance means that regulator need to actively surveil all these activity into the market. Like take the use case of 4 or take the use case of 6. Maybe the historical data is not available, maybe the public information is available, but there is no private information. Bid-ask spread is there, market liquidity is there, price fluctuation is there. So definitely the regulator need to take an active stance. So stock need to be actively surveilled. That is there. So if you see the use case number 7, you don't have the historical market data information, you don't have the public information, you don't have the private information, but you have bid and ask, market liquidity, and price fluctuation. Then yes, the passive surveillance thing. So these are the categories through which the stock need to be go based on the data set that we are identifying. And then is you can see the use case number 10 is a business as usual. So we can, what happened like in Indian economy, what the regulator is moving more towards the preventive surveillance rather than the reactive surveillance. That is what the whole idea is. That's what we are giving this instance to a regulator. So try to move to the preventive surveillance rather than getting into a reactive one. Now I'm just coming to how the theoretical implications of the study. So if you can see that, yes. So okay, so you can see this study has a multiple implications. So first I'm talking about the implication from the investor's perspective. So as we all know, like Indian market, based on the study, Indian market forms in a mid-cap and small-cap segment forms in a weak form of efficiency, suggesting that investor and the broker should proceed with the caution while choosing their portfolio, because this is a weak form of efficiency that we are talking about. You can see the findings on investor behavior strengthen the literature on the behavioral finance. So basically, there is a debate about the behavioral finance, whether the Indian market attracts a wide range of investors from different financial goals. Some are focusing on the long-term investment, some are focusing on the short-term investment. So basically, yes, definitely the finding is really strengthening the literature on the behavioral finance to make sure if the market is a weak form of efficiency, you should proceed with a caution rather than getting into all the stocks or advices which you are getting it from the this thing. And misleading investment advice, where we can say there is a misleading investment advice that is keep going in the market. That is also underscores the informed decision and navigating the complexity of the stocks. The findings suggest that what is a caution against bias, misuse of social media, herd mentality, and impact of influencers. So this research is also talking in these aspects, which says that these biasness, these influencers is also impacting. I can give you the recent example of maybe you guys heard the Nazara technology. Like recently, they come up with government come up with the ban of online gaming thing. But you can see there are some prominent family. I don't want to name it, but there are certain prominent family who so they sold. So this is a clear case of information asymmetry is there. That's why we can clearly say that yes, information asymmetry is there. So we have to be very cautious. We see that the stock is fundamentally strong, but there is information asymmetry. There is a group of people who has as I said in my assessment, there is a private information. That private information is not there with the common people, but there are certain set of people who have this private information. So that is there. The herd mentality and innocent behavior. Let's say there are a senior citizen who wanted to trade or who wanted to invest in a market, but because the market investor behavior in such a way that the herd mentality is overcome. That's why the misleading investment advice. A 65-year senior citizen can't directly trade in equity. That's what the whole concept of finance. But we are getting a misleading investment advice from the regulator. So that's why the regulator also need to disclosure aspect, which is still missing from the India's perspective. That's why this study has a very important, very much relevance from the investor perspective. Now I'm talking about the regulator's aspect. From the regulator's point of view, what has happened here is although regulator is doing a lot of things to make sure the market integrity and transparency will maintain, but this can give you more areas. Like as I said, this is the 5 factors. 5 factor, if regulators start working on investor awareness program more proactively. Although I had a word with the CRO ma'am of Bombay Stock Exchange, and they said that we are doing 200 investor awareness program on a yearly basis. So I told them, ma'am, we have a mutual fund flow of 50,000 crore in the market, and out of which if we are doing 200 awareness program, that is not something which we are getting into the masses. So we also need to look into that aspect. Significant historical market data. You can always play with the significant, or they can always build lot of models, lot of analysis based on these historical market data to make sure because price is reflecting all the information what is there in the market that this study gives you. Key constituents. So you can see by highlighting the key constituents of investor behavior, the researcher underscore the importance area which require policy attention and support for regulator. This include measures of curb herd mentality, misguiding financial rehearsal, misuse of social media, and policy initiative for financial literacy. Financial literacy is also one of the aspects that which need to. So there are different aspects that is working. So this study can also highlight all these aspects. Now the regulator has to start working on these aspects and more proactively. That is what we are trying to do. So although they are doing a lot of things, but yes, if you compare with the data, the kind of investment, the kind of flow that is there in the market, but that is not aligned with the current task that is being there. So that was there, and this is the conclusion. So you can say, as stated earlier, market efficiency is not absolute paradigm. Definitely I can say that this is specific to the scope of project, the scope of period, maybe from 1st Jan 2008 to 31st December 2023, there maybe market falls in a weak form of efficiency. Maybe from 1st Jan 2013 to today, maybe market forms in a semi-strong. This is very relative term. So if we can say that yes, this is something which we have defined here. The research conclude that the Indian capital market, mid-cap and small-cap indices exhibit a weak form efficiency. However, given the buoyancy of this segment in a recent year, there should be a strong regulatory approach to improve the efficiency of these segments. Because these, if mid-cap and small-cap is a weak form of market, but because there is a lot of retail participants are there, so we should, the regulator should ensure that all the factors, critical factors that we have considered, we have identified in the research need to be well taken care. According to the research result, market inefficiencies are causing the several direct and indirect factors. Historical price is one of the direct factors. So there are direct factors that is being come out with this research, and there are indirect and latent factors. See, investor behavior has strongly emerged as one of the strongest latent factor. There are very limited number of research that is there in a market which clearly talks about how investor behavior is related to the market efficiency. And what is the degree of correlation that is there here, which we have come out with this thing. We can see that this is a very strong correlation of investor behavior with the market efficiency, and it has a profound influence on the market dynamics and stability. That is it. This is followed by the market misconduct factor, which we can severely pull down the efficiency of a mid-cap. As I said, market misconduct has a, if you can see, there is a negative correlation with the market misconduct. So if the market misconduct is increasing, the market efficiency keep going down. That's what's there. Information asymmetry, I have given the example of nanotechnology. So there is information asymmetry. Effective corporate governance practices can contribute by reducing the information asymmetries and promoting investor trust. Enhancing the trading volume and reduction in the price fluctuation of volatility is the key goal to inspire the implication. Now this is a very important aspect. You can see the impact of technological advancement on market efficiency should be thoroughly analyzed, as it affects the nature of financial crime and regtech technologies to deal with the crime. So if you can see here, as we know, like there is now the machine learning trading, they are trading with the AI, they are trading with a different aspect. So we need to make sure like you have a robust system, you have a robust mechanism to make sure that has been taken care, that has been considered. There are a lot of high frequency trading is being performed, that is 1/1000th of the seconds in a factor of time. So we need a sophisticated system to deal with that. That was the conclusion. So can I go to the further research direction? Okay, so you can see here, despite the significance of the market misconduct and market regulation to market efficiency, studies are in extremely limited and sporadic fashion. There is immense scope of other researchers to explore this area. So you can see here, the present study has been conducted from the broker's point of view. You can have a similar study from the investor's perspective also to understand whether these also factors are also relevant from the investor aspect or not. The present study has focused on market efficiency of mid-cap and small-cap, but still there is the aspect of sectorial indexes missing. Sectorial indexes are also very niche things to play. The present study is used to explore an exploratory approach to derive the 5 major critical factors, which include all the factors which I have already defined. Further studies can adopt a descriptive design to study one of the above factor in a greater detail to understand the market efficiency. So as I said, like investor behavior has 11 constituents. We can have a greater detail of study to understand all these 11 constituents are directly correlated with the investor behavior, or we have some more constituent which is also impacting the efficiency based on the same with the market misconduct, historical price and all those things. So definitely yes, there are further research directions are there. Research limitation, as you know, like no research work is free from the limitations. So you can say there is scope of research was limited to the market efficiency in general. Sectoral specific variable influencing the market efficiency. So definitely market efficiency is a dynamic phenomenon. As I said, it's a very dynamic phenomenon. So maybe the period which I have selected, it forms a weak form of efficiency. Maybe some other period may have some semi-strong form or some different form of efficiency. So definitely yes, that is there. The studies center around the critical factors of the mid-cap and small-cap. Thus the most critical factor has been analyzed in excess. The chance of overlooking some of the elements which can be fully ruled out. Which can be fully ruled out. A limited literature is available on the market efficiency factors. So yes, that is very important here. The result obtained through the regression require a greater empirical evidence analysis to understand the extent and impact of various factors on market efficiency. So that is the research limitations here. So this is my paper publication. This is my first paper publication. This is my second paper publication. Yeah, this is a patent thing. I think I filed one patent here and one patent is still in progress in this case. Also, there is, apart from this, although I filed a couple of patents based on from my organization, I filed close to 9 patents in US. So although, but that is not with the SIR, so that's why I have not included in the scope of this academic thing. This is the copyright, the matrix, the grade assessment matrix which we have defined to the regulator. These are the paper presentation. I presented it into SRM University Delhi and the Symbiosis School of Banking and Finance here. And some workshops that I have attended during the tenure of my this thing.
Thank you so much.
Thank you.
You have given a very great presentation and you have publications also. Shailendra, whenever you work as at the beginning you said there is always a scope for improvement.
Yes, ma'am.
We can refine our work. So my first question is that why you concentrated your study on the Nifty MIDCAP and small cap. One of your hypotheses in the hypothesis 11, you yourself proved that there is no difference in the market efficiency of MIDCAP and small cap. And if I generalize and I take it further, that there is no difference between the market efficiency between MIDCAP, small cap and large cap. Okay? I may generalize it or not, this is the one thing. And if not, why do you feel that the market efficiency for these segments should be different from the large cap? Why you have taken this?
Good question, ma'am. So, ma'am, first of all, thank you for giving me an opportunity. So, as you asked, there are two questions like whether the market efficiency of mid cap, small cap, and large cap is different. And the second question is why you think the mid cap and small cap efficiency is different with the large cap. Right. So the first question is that yes, definitely large cap efficiency, there are a lot of research, there are a lot of things that has been performed in a market which clearly states that large cap always falls in the semi-strong to strong, lies between that graph if you see here, lies between the semi-strong to strong because the liquidity is high. The liquidity is totally different as compared to the mid cap and small cap.
You are saying on the basis of facts, when you say that the liquidity is more in this or far, okay? So the price will be more efficient in that case, because very less. Do you have any empirical evidence or it is your opinion?
Ma'am, I read couple of papers which they talk. You can see here. I've cited
See, whatever we say in the field of finance, this is purely
yeah. Yes, ma'am.
I cannot rely on the statements.
Yes, ma'am. I can just tell you. Just give me a second. So, when I was reading this Khan and Date in 1920, so this here what I identified here is like okay. They mainly talks about the large cap stocks, and they are talking about the.
These references you gave for
Yes, correct. Yes. No, ma'am. When the Khan and they talking about, they are talking about the Indian capital market. And Indian capital market, they are segregating the Indian capital market to the Nifty 50 and with the overall market. So what they identified, the Nifty 50 has a different set of you can say the efficiency level as compared to other market, because there are a couple of factors that they have identified here. The first factor is that you can say the information asymmetry is not very much, because these companies are very much profound. As I said, there are 5 factors. The first is the firm accountability and responsibility. The corporate governance is very strong with these companies, which is there.
I don't agree. Do you want to say that the corporate governance is weak in case of MIDCAP and small? I cannot take this statement. Corporate governance norms are equally applicable to any kind of organization. It's not related, anything related to the market.
Ma'am, I will tell you the reason behind that. Because what happened when you see there are a lot of, I was discussing with sir, there are company like Gensol.
Okay.
Yeah.
If I go by your viewpoint, how many corporate scandals have been in the large cap and how many in the mid cap?
Yeah, ma'am. Large cap we all know like the corporate scandals, but mid cap, yeah.
So if the information would have been so much transparent, the things would not happen there.
Correct. I agree.
And how many greenwashing practices you see in large?
Which practice, ma'am?
Greenwashing practices.
Yeah, ma'am. Large caps are there. Large caps are there. But I'm telling you the factors. I'm telling you the factors. Yeah.
My only question is, we may take the discussion at the point of
Okay.
why you concentrated on this. And in the references, you are saying that these persons have proved that their mid-cap and small-cap somewhere live in semi-strong and in the third, proving that. Okay? So what is the novelty here? Somebody has already done in the Indian market.
Ma'am, so why I have why I'm taking that, because as you know the retail participation is significantly high in the mid cap and small cap segment. So definitely we need a greater, and nowadays if you see from the efficiency aspect I'm talking about, my area is not, I'm looking into efficiency. So maybe what I'm trying to say here is someone has already proved this is a weak formation, so this is a semi-strong form. That is what not I am proving here. What I am trying to do here, I am trying to take a look of what are the factors that is contributing these efficiency.
Factors are not being explored.
Pardon?
Whether the factors are not being explored.
For these papers?
No, if I say that the Indian market is not strong, okay, I say on the basis of certain findings,
Yes.
on the basis of certain facts. So do you want to say that the earlier people who have worked on the market efficiency have not explored the factors or the reasons for the market efficiency?
Ma'am, they are working on the secondary data. They talked about the stock price movement. They talk about how the price has moved, and based on that, that's why I'm saying they.
You want to say on the basis of the primary data nobody has done?
Yes, on the.
Are you sure?
Yes, ma'am. That's I'm 100%
So you say
sure.
that this is my weakness. That I separate the
Brokers.
from primary.
Primary information.
Okay.
Yes.
I go with you. Then you work on the first objective, the exploratory factor analysis, where you said that you want to explore something.
Correct, ma'am.
Okay.
Yes, ma'am.
Now go to the findings of the first.
Yes, ma'am.
बेटा आपने वो बनाया ना चार्ट जिसमें कंस्ट्रक्ट करके
ये अच्छा ओके
आपने बोला 47 आइटम्स है देन
Okay.
11 then 5 आगे करो आगे नेक्स्ट हाँ
Okay.
इसको बड़ा करो
Yes.
अच्छा suppose मैं ये investor behavior is a field we have given it a name of a construct. You see, market misconduct is a broader field.
Yes, ma'am.
We have given it a name. Investor behavior, market misconduct. Well, if I say investor behavior itself is influenced by thousands of factors. Okay. In your these 11 factors, you see, you are taking the influence of peer and family members. You are taking education qualifications. You are taking biases also. The better approach would have been that I would have taken a certain model for that. Maybe TPP model, then demographic factors separate. Then I want to segregate that what are the demographic factors, let's say, what is the, say, TPP norms, how attitude is impacted, how my personal norms are impacted.
Correct.
That would have been come up with the complete findings.
Correct.
Are you getting my point?
Yes, ma'am. Yes,
So,
ma'am.
आपने ये जब डिसाइड करे चलो 47 ये कहाँ से दिखता है?
Ma'am, basically my objective here, my subject is.
ये जो 47 स्टेटमेंट्स बनाई कैसे?
मैम ये इसके लिए हमने क्या किया, बेसिकली हमने क्वेश्चनर किया, वे डिफाइन
क्वेश्चन हमें डाले कैसे?
कोई में हाँ
तो वो डॉक्टर साहब बनाते हैं ये कोई 47 और बना देंगे वो बनाएंगे वो 47 47 भी और आगे तो आपने 47 भी काम
मैम क्वेश्चनर हम जब हमने डिफाइन किया तो क्वेश्चनर डिफाइन करने के बाद व्हाट वी डिड टू आइडेंटिफाई लेट्स से आई डिफाइंड ओके व्हाट आई एम गिविंग एन एग्जांपल व्हाट मोटिवेट्स यू टू इन्वेस्ट इन दिस थिंग्स सो देयर नहीं आई गॉट योर पॉइंट मैम लेट मी एक्सप्लेन
आपने वो पहले बोला 55 फिर मैंने
हाँ।
और क्वेश्चनर डिफाइन किया मैंने बहुत ध्यान से सुनी है
Yes, sir.
डेट वैलिडिटी चेक करी अल्टीमेटली 47 पे ये पर लगाया पांच कंस्ट्रक्ट आया
करेक्ट
तो ये 47 फ्रॉम वेयर यू पिक दीस स्टेटमेंट्स
मैम दीज आर माई क्वेश्चनर्स बेस्ड ऑन देयर आर टू एस्पेक्ट दैट आई डिड क्वेश्चनर बनाने के लिए मैं हाँ
तुमने 47 बनाया
यस मैम
मैं करती हूं मैं ये 47 में लिखने कोई और करती हूं जरूरी थोड़ी मैं ये करूं
हाँ मैम इसको मैंने
बनाते हो कोई और करते हो तुमने कहां करी
मैम इसके लिए जो मैंने स्टार्टिंग में जो लिटरेचर रिव्यू किया वहाँ से मैंने आइडेंटिफाई किया और फिर मैंने 5 SME सब्जेक्ट मैटर एक्सपर्ट से इसको एज आई टोल्ड यू लाइक आई एम वर्किंग इन अ trade surveillance and financial crime domain. So I did a revalidation with them, try to understand these are the factors that I have taken whether this yes sir.
एक आपने बोला that whatever factors I identified I try to find out the interlinkage among those factors extracted.
Correct ma'am.
Related to peak efficiency or whatever.
Correct.
उसके लिए आपने कुछ hypothesis test करे या 5 से लेके HL तक
10 तक yes ma'am.
तो इसमें interlinkage कहाँ पे है?
Okay, so ma'am what I have done हमने ये चेक करने की कोशिश की
आपने लिया investor behavior to investor efficiency in market misconduct to investor efficiency है ना interlinkage है how investor behavior misconduct और how market misconduct is impacting investor behavior ये चेक करा
हाँ तो मैम मैंने इसमें जैसा ही साइड कि मैंने इसमें पहले ये आइडेंटिफाई किया कि वेदर इन्वेस्टर बिहेवियर इज कोरिलेटेड विद द मार्केट एफिशिएंसी और नॉट इफ इट इज देन
efficiency आपके 5 जो
कंस्ट्रक्ट है yes मैम
उनका उनमें आपस में इंटरलिंक चेक करें उसको उनमें इंटरकनेक्टेडनेस चेक करिए आप
उस पांचों में
हाँ
मैम उस पांचों में मैंने उसका मार्केट इससे किया एफिशिएंसी से किया उसको आप
वो आपने कंस्ट्रक्ट तो मार्केट एफिशिएंसी पार्ट में
यस
आपस में इंटरकनेक्टेडनेस आपने चेक नहीं किया आई वांट टू नो यस
I think no I have not done that yes
It's not necessary that you should do it every work. You have
Yeah.
done a good work.
Thank you.
I just wanted to know you have done this or you have not done this. Okay, there is a term R and there is a term ask, adjusted ask. What is the difference between them?
मैम बेसिकली ये सारे जो टर्म्स हैं मैम सॉरी
Definition लगाया ना आपने?
Yes, ma'am.
लिखा हुआ ask को, adjusted ask को.
Yes, ma'am.
Adjusted ask को आपने लिया या ask को लिया और adjusted ask के क्यों नहीं लिया ये बस मैं को बता दूं. This is my last question.
मैम व्हाट आई नो लाइक टू बी ऑनेस्ट विथ यू मैं इसको इंटरप्रेट कर सकता था बट यस इफ यू गेटिंग इनटू कि लाइक व्हाट इज दिस आर एंड आल्सो थोड़ा सा कॉर्पोरेट में मैम वो
चलिए कोई बात नहीं आप कॉर्पोरेट में मैं समझती हूँ बट सिंस एन academician is relatively new so we go into methodology also
Sure.
they take more time I suggest you that then you go on the other side of category whenever you are giving any presentation whatever is there on the screen should be very clear
Sure.
here you have used ask square you should have it because it is just ask square is less than the you have used it correctly, but if the adjusted ask is more than that, we take the adjusted ask.
Okay.
If we keep on adding more values for this, and the adjusted ask is significant or not, that also has to be seen. Whether it improves the predictive power of the model or not.
Not, okay.
That's
Okay.
Rest is okay from my side. If there are queries from
If I give you option that in one word you need to tell in one word only.
Okay.
Okay, what is problem of stock market? What is the base on which the problems are need? I mean, what is the center of gravity? Your market is there, whole you scope there, right? And you build like 5 years. So what is the problem of giving word, right word?
Sir, transparency and market integrity.
What is the solution for it? One word only.
Of the problem. No, I'm just asking question. I'm asking.
My simple question is that this is the turmoil there, the confusion there, big things are emerging there, crowd is there, right? Company is there only, but crowd is doing that. So what is this happening? वो है क्या? Problem क्या है? Problem word क्या है? एक word में बताओ. There are many solutions. There are many above humans are there now who do acts. Institutions are only that bricks and mortars now. So what is the problem? You are not getting my point.
I'm trying to think.
There is problem that you did PhD now.
Yeah.
Why it is?
Okay. So if you ask me, safeguarding the economy or investor. Safeguarding the economy.
Maybe some looters are there. I should be a shield only, right? Looters are there.
No, I mean to say that if we can have effective surveillance or mechanism.
Why surveillance? If you allow that now, then it takes. You know that.
Yes.
I should do that.
Sir,
How you a doctor here? You are giving me shield and promoting somebody else. Generalize it. My question is okay or not?
Okay, sir, you are free to ask.
So if you are to give medicine to a robber and to a saint, then how would you suggest to both of the parties to come to a consensus? So that problem is resolved forever. Right.
No, I'm just thinking. No, I'm just thinking the right word. As you said, it's in one word, so I was trying. Yeah. So technically, the whole idea behind that is we need to make sure the overall goodwill or overall image of the country has to be safeguarded with these perpetrators or manipulators. So what we are trying to do, we are trying to ensure an effective mechanism which can help us in identifying other FIs or FPIs or FDIs to ensure and also the retail investors to trust. That's why I said my first word is integrity and trust. If you need to build integrity and trust, like as we said, that Supreme Court, everybody has a trust on the government or trust on the not government, on the Supreme Court. So that's why we need to build an integrity and trust. To build an integrity and trust, we need to look for all the factors. So when I'm saying market efficiency, so I don't mean to say that little market efficiency. What I'm trying to say that these are the factors which is pulling down the efficiency, and if you need to pull it up, you need to work on these certain sets of factors or certain constituents to ensure that this has to, because we cannot ensure that somebody should not rob, but we can ensure that somebody should not be touched my areas, my surveillance. So that's what I want to try to this, because what happened, it has a chain reaction. It is once the manipulation happens, it is not just a retail investor, but it is the goodwill of the organization or country or things. Market goes on a stake.
Thank you for your answer. Right, but
that's why I was thinking all this.
Psychology, right? There is no end, right? It's totally that we people create the scenarios where, right, demand, pressure, supply, pressure, right? So ultimately, action should matter.
Pardon?
But it will never happen. Right?
Yes.
There should not be greed. There should be honesty. It will not come. When greed is there, right, then honesty will not. Only one will be there.
Only one will be there. Correct.
There is no solution. And you end up with PhD.
We need to stop greedies.
But it will not.
That's what I said. That's what. Yeah, that's why I was just thinking like it is very difficult to manage them, because that is their work. Like our work is to do job, that their work is to do that thing.
So one question, Shailendra Singh, you have
Yes.
done very good presentation. Like we have seen the every day, na, every week means almost like 10 to 15 stocks are listing in stock market, in small cap, mid cap, etc. But you know all the stocks are oversubscribed.
Yeah.
And after a few months, now, like within 2 or 3 months, within 6 months, all the declining like this.
Yes, sir.
So what is the relation between your study and these kind of declaration?
That's a very, very valid question. So that's why I said, sir, it is not about the technicality of the market. That's why my one objective is investor behavior and the herd mentality. That is what. See, there is IPO season. When the stock market goes good, so since last 3 months, again this IPO market has picked up. Prior to 3 months, I think there were 3 months of period when no one is investing in IPO market. That was a slowdown, and prior to that again there was a huge boom. So it's a herd mentality.
Stock is very good in NTPC Green, Bajaj Housing Finance.
Yes.
The stock is very declined, lower than 100 rupees.
Yeah, because what happened, that's why I said, it's all about the herd mentality, sir. See, recently the urban company has subscribed more than 70% of the price. So do you think that Bajaj Housing and NTPC Green say ye better hai? No, it's all about the herd mentality. Let's say company is looking for 3,000 crore. People are giving 3 lakh crore. See the quantum of money that India is having right now, but because what happened, like they know, they have certain sets of understanding. Okay, there's a यहाँ पे invest करते. Now Indian mentality is like they are the trader, and once they get into a loss, they become the investor in the market. They buy it for a quick gain, but once they find okay the stock is not moving, they are become the investor and they are waiting till the stock price goes at their desired level. So that is what happening here. It's all about the herd mentality. Once one said it is good, then everyone is also working in that direction. So that's why I said this is directly correlated with the one which I am talking about, the herd mentality. And in the herd mentality, people keep purchasing, and there is a time when no one is purchasing. You have a good stock, but still no one, the subscription is not even 100%. Just because the overall sentiment of the market is bad.
So when you do rest of your life now, right? You can't do that fast. In future, you got a good career, right? So please devote some good time
Sure.
to generalize the things here, right?
Yeah.
Don't speed up. Think more. 99% should be thinking, 1% should be working on. Rather than working 99% and 1% thinking. So you are not able to understand the whole scenario here, honestly. What is happening in this world? You may be awarding another degree to one of the saints there to prove that God is there, right?
Yeah.
But so something up. Why is happening? It is only not psychology there. Some people are doing that. Somebody is saying that. Somebody is acting on that. Actions are actions are. Am I right?
Correct.
We are not.
No, I agree with you.
Full right.
I agree with that.
Thank you.
So he is able to handle most of the queries and has given a very comprehensive presentation. I think we should congratulate him for the award of PhD degree. Congratulations.
Thank you.
Congratulations, Arvind. Thank you everyone for the